Gold, the Chinese, interest rates, and more. There have been both new headwinds and tailwinds for gold. Which will win out? This is Coins Roc. Stay tuned as I explain. Gold has been having quite a year. Since hitting a low of $1,985 on February 14th, gold has surged by over 20% in the past 2.5 months. On April 12th, gold hit a high of $2,431. Since then, the price has settled down to around $2,300 an ounce. What is going on? Is the rally over, or will it continue after pausing? Let's look at recent developments. One headwind for gold has been the easing of tensions in the Middle East between Israel and Iran. Geopolitical tensions have historically been bullish for gold. Also, while the Russia-Ukraine conflict continues, it doesn't make the headlines like it used to. Right now, neither conflict seems to be on the verge of expanding into a wider war. Another headwind for gold is profit taking. With gold up over 20% in a short period of time and up over 30% since last year, some gold investors are tempted to cash in on some of their gains. The Federal Reserve's latest announcements on interest rates is yet another headwind for gold. At the beginning of the year, the markets were pricing in 5 or 6 interest rate cuts. As the year has advanced, the number of rate cuts expected has continually declined, and now we're looking at possibly 2 or even 1 or even no rate cuts. Lower rates will mean a weaker dollar and higher gold prices, but it doesn't appear that any rate cuts are coming anytime soon. On the flip side, there are also some strong tailwinds for gold. One of the biggest has been increased purchases from the Chinese, both the government and private citizens. China is already the top gold consuming nation, and supply has not been able to keep up with demand. Chinese people want gold as a hedge against weak real estate and stock markets, as well as protection against the further decline in the purchasing power of the Chinese currency, the yuan. Normally, on the Shanghai Gold Exchange, when you purchase a contract, you take immediate possession of physical gold, except demand has outstripped supply. This has led some to purchase on the Shanghai Futures Exchange, where trading volume has increased more than 200% in the past 2 months. Chinese citizens are willing to take delayed delivery as long as they can lock in the purchase at current prices. Between the Shanghai Gold Exchange and the Shanghai Futures Exchange, Shanghai is now the world's second largest gold trading market, second only to London. Meanwhile, the Chinese central bank added to reserves for the 17th straight month and now holds 72.74 million troy ounces. Chinese bank purchases were record amounts in 2022 and 2023, and 2024 is on pace for yet another record. As far as U.S. purchases go, there has been strong demand for gold as the price has increased. Costco is now selling over $200 million a month in gold. You can't turn on your television without seeing commercials selling gold. Gold is continuing to gain respectability as an investment asset class. Predicting the price of gold is always a guess, but I feel that the current pause in the price of gold is temporary. Eventually, the Feds will start cutting interest rates, and the price of gold should continue advancing. Remember, this is just my opinion, not investment advice. I hope you enjoyed this video. If you'd like to stay current on the latest developments in gold,